For over a century, the story of football was, well, pretty simple. You had muddy pitches, local diehard fans, and really just one undeniable goal: winning silver. But in this explainer, we're looking way past the pitch, because right now, behind those packed stadiums and bitter rivalries, a massive multi-billion-dollar financial shift is taking place. It used to be that winning trophies was literally the only benchmark for success. But today, the rules of the game are being completely ripped up and rewritten. The world's richest investors are pouring absolute billions into elite football clubs, and here's the kicker: they're doing it even when those exact clubs are actively bleeding cash. So that leads us to a massive paradox, right? Why? Why on earth are billionaires buying money-losing clubs? What exactly do these financial heavyweights see that millions of ordinary fans cheering in the stands just completely miss? I mean, it goes against every traditional rule of finance to acquire an asset that loses cash. Yet the absolute smartest money in the world is doing exactly that. And look, we aren't just talking about wealthy local businessmen anymore. The new owners are global billionaires, massive private equity firms, and enormous sovereign wealth funds. And the truly shocking part of all this, many of these financial titans aren't even expecting immediate profits from the billions they're dropping. They're playing an entirely different game. You see, football is no longer just a sport. It's actually becoming an entirely new financial asset class. The people buying in, they aren't just buying sports teams. They're making what is arguably one of the biggest strategic bets of the 21st century. Let's dive into Section 1, the media company pivot. This is where we see a fundamentally new business model take shape. For decades, owning a football club was, frankly, considered a terrible investment. It was this risky passion project for wealthy fans who fully expected to lose money on the deal. But today, investors have completely stopped looking at clubs as local sports franchises. Instead, they treat them as highly scalable global media companies. It makes sense when you think about it. Traditional investors used to run for the hills when it came to football. The industry was just plagued by high uncertainty and extreme emotional volatility. Imagine running a traditional business where one player's injury, or literally one bad slip on the grass, could completely destroy years of careful financial planning. It was an absolute nightmare for any conservative investor. But then the whole perspective shifted with one powerful realization. A football club isn't just a team, it's an audience. Think about the sheer gravity of that for a second. Millions of people tuning in to watch every single week, millions buying merchandise, millions following every social media update, engaging daily. In modern business, attention is currency, and football commands more attention than almost any other form of entertainment on earth. All those global audiences, they generate massive, incredibly diverse revenue streams. Investors realize they aren't just buying a roster of 25 players, they're buying into incredibly lucrative broadcasting rights, global sponsorships, advertising, digital streaming, merchandise, tourism, and highly valuable digital data. The biggest clubs today operate exactly like elite media brands. Every match, every transfer rumor, it creates highly monetizable content. But there's a secret weapon here that football has that almost no other industry on the planet possesses: the ultimate asset: loyalty for life. Think about literally any other business in the world. They have to beg for repeat customers, right? They spend billions on marketing just to keep you coming back. A successful football club inherently possesses customers who don't just buy once, but stay fiercely loyal for their entire lives. Most traditional businesses would do absolutely anything to achieve that level of unshakable consumer devotion. Because of this unshakable loyalty, billionaire owners aren't just looking at the league tables to measure success anymore. They're evaluating these clubs using the exact same metrics you'd use for tech giants and major entertainment platforms. We're talking audience growth, global reach, brand strength, and commercial potential. In the eyes of Wall Street, an elite club is effectively a premium entertainment platform. Moving on to Section 2, the economics of scarcity. Let's look at why these club valuations are skyrocketing. Scarcity in this context is completely unmanufacturable. Look, there are thousands of normal companies you can just go buy on the stock market today. But there are only a handful of truly elite football clubs. You can't just create another Manchester United overnight. You cannot build another Real Madrid in 5 years. You absolutely cannot manufacture a century of history. And you definitely can't buy deep-rooted tradition. Elite football clubs sit in the exact same category as high-end luxury real estate, rare collectibles, and fine art.
These are all assets defined by a strictly limited supply, meeting a massive wall of global wealth. Just like you can't paint another original Da Vinci, you can't spawn a new heritage football club. The supply is permanently capped.
And the value formula at play here is actually highly predictable. Step 1, the number of truly iconic clubs remains strictly limited. Step 2, as global wealth grows, more and more investors compete to own this capped supply. And step 3, that relentless demand pushes valuations infinitely higher. Extreme scarcity creates demand, and that demand creates explosive compounding value over time.
Which brings us to section 3, the global attention machine. This is where we see just how borderless this asset really is. Technology has systematically wiped out every single geographic barrier that used to exist in this sport. Today, fans across 5 continents, Asia, North America, Africa, the Middle East, and Europe, they are all instantly supporting, and more importantly, spending money on, the exact same elite clubs. It operates as this highly efficient growth funnel. Picture this: a teenager in India or a diehard supporter in Brazil watches a match live. Modern technology instantly converts that distant fan into a digital customer who can buy a jersey or streaming pass with literally one click. Every single new fan in every single new market creates a brand new, highly scalable global revenue stream. And unlike a lot of mature industries, football still has massive room to grow globally. That is exactly why these investors are buying the future. They aren't spending billions for the profits they can make today. They're securing massive future growth, capturing future audiences, and quite literally buying future global influence. So we return to our original question. The next time you see a headline about some billionaire dropping $3, $4, $5 billion on a football club, don't ask if they're just a passionate fan of the sport. Ask yourself, what do they see that everyone else is missing? You've got to look past the grass, past the players, and past the scores. The biggest investors in the world aren't spending billions just to watch matches from a luxury suite. They are buying the future value of global attention, which is perhaps the most powerful, multi-billion-dollar asset of all. Football isn't just a game anymore, it's a global investment engine. So the only question left is, as this attention economy compounds, who will own the world's most valuable audiences tomorrow?